Today, I want to talk about a company that doesn't always get the attention it deserves, but has some serious long-term potential. It's Corning Incorporated, ticker symbol GLW. Now, you might know Corning as the company behind Gorilla Glass, the stuff on your smartphone screen, but there's way more going on here than just fancy glass. By the end of this video, you're going to understand why Corning could be a strong long-term investment and maybe even a hidden gem in today's market. So, what exactly does Corning do? They're a materials science and technology company that operates in 5 core areas: display technologies, optical communications, specialty materials, environmental technologies, and life sciences. That's everything from the screens on TVs and laptops, to the fiber optics that make 5G work, to the lab equipment used by biotech companies. What makes Corning unique is that they're not just another manufacturer. They've invested over $10 billion into R&D over the last decade and hold over 50,000 patents. They have proprietary manufacturing techniques that no one else in the world can replicate at the same scale and quality. They also have really tight relationships with massive companies like Apple, Samsung, and Verizon. That kind of customer base doesn't just come from good marketing, it comes from being essential to the supply chain. Now let's talk about what's really exciting, the long-term growth story. Corning is right in the middle of multiple megatrends. As 5G continues to expand, so does the demand for high-quality fiber optics, which Corning supplies. The rise of AI and cloud computing is fueling massive investment in data centers, which also need fast, reliable fiber connections, again, a Corning specialty. In the automotive space, more and more vehicles are using advanced glass for displays, sensors, and heads-up displays. And let's not forget pharma and biotech, where Corning provides the lab tools and containers that make research and production possible. So we're not talking about hype. These are real long-term shifts in how the world works, and Corning is plugged into all of them. Financially, Corning is solid. They bring in around $13.6 billion in revenue and are expected to earn between $1.80 and $2 per share going forward. Their balance sheet is healthy, with a manageable level of debt, and they've been improving their margins. The company generates solid free cash flow and returns it to shareholders through dividends and buybacks. In fact, their dividend yield is over 3%, and they've increased it every year for more than a decade. On top of that, the stock is trading at around 15 times forward earnings, which is below the S&P 500 average and even below Corning's historical average. So there's value here too. Now, if you're into technical analysis, the setup here is also pretty bullish. The stock is trading above both its 50-day and 200-day moving averages, and there's been a golden cross. That's when the 50-day crosses above the 200-day, and it's usually seen as a strong buy signal. Momentum indicators like RSI and MACD are positive, and volume trends suggest institutional investors are accumulating shares. If Corning can break through resistance around $38, the next technical target could be somewhere in the $45 to $50 range. Of course, there are risks. The consumer electronics segment can be cyclical, and Corning does have some exposure to China, which adds geopolitical and economic uncertainty. But the company is well diversified, and their exposure to telecom, automotive, and life sciences helps cushion any slowdown in consumer demand. So here's the bottom line. Corning is a company with real technology, deep industry roots, and exposure to some of the biggest secular trends of the next decade. It's undervalued, financially strong, and technically setting up for a potential breakout. Plus, you get a healthy dividend while you wait. If you're a long-term investor looking for a mix of stability, innovation, and income, Corning is absolutely worth a serious look. That's it for today's breakdown. If you found this helpful, don't forget to like the video, subscribe for more in-depth stock analysis, and drop a comment below if there's a company you want me to cover next. Thanks for hanging out with me, and I'll catch you in the next one.